Well, of course, a lot of people think that we're kind of ridiculous looking because we've given people advice about how to run their economies for years, and then we go through something like this. The Chinese have been among the most outspoken. Of course, there was an editorial in Xinhua earlier this week saying maybe we should prepare for a post-America world. And then the Chinese Dangog credit rating company has lowered the U.S. credit rating. You probably didn't hear about this. Doesn't really matter to anybody out there, but they're now calling us an A-. They've marked us down from an A. They cut our credit rating after the 2011 budget standoff. Didn't really have an effect on the markets, about as much effect as S&P's did. But it does show you where the Chinese are coming from. Now, the real question is, do they stop spending money in the United States? Do they stop buying our Treasury bonds? No indication of that so far. We haven't had data in a while because of the government shutdown, but they're still the largest foreign holder of U.S. Treasury securities.
Yeah, well, speaking of China, a lot of key economic data that may move markets is coming out of China.
Yeah, tonight, if you're not too tired from staying up all last night to wait for the budget settlement, Chinese data coming out tonight includes GDP, and this is what everybody's watching for. Could be a big market mover. They're supposed to try to get to 7.5% growth. The forecast is they'll come in a little ahead of it if they were to be light. And we did see exports lower than expected last month. That would upset a lot of people. We also get some industrial production numbers overnight and retail sales. So we'll see how the Chinese economy is going. Haven't had a read on that for a while. Something else for the markets to concentrate on other than the U.S. fiscal follies.